think there's a lot of anxiety out there, and people are unsure. And when they get fearful of things, what's going on down in Washington, what's going on over in Europe, what's going on in China, they put everything all together and they're like, uh-oh.
Stock markets always cannot stand uncertainty.
Key term from all of the traders I've talked to today is uncertainty. They say the market does not like uncertainty.
No, it certainly doesn't. It absolutely does not like uncertainty.
When you have uncertainty, it creates volatility, no matter where the uncertainty comes from.
Most of them clearly are geopolitical issues, certainly what's going on in Europe, what's going on in Greece, Spain, and Portugal, as well as really what's going on in this country. There are still plenty of issues in this country that we have to deal with, economic issues, housing issues, job issues, and so that coupled with what's going on in Europe, and also, let's talk about it, what's going on in Iran clearly has added to the volatility. Come on.
Landmines exploding every month, it seems. Last month it was Dubai.
Right.
This month it's Greece.
Greece. But it's all of these debt crises outside the U.S.
We're such a global market that anything can spur us, and this is what's going on.
What happens to this market if Greece doesn't get a bailout?
Well, it's not going to be good for the market, but I think whatever negative effects there will be relatively short-lived.
Initially, the market will probably rise. Because you're going to get a lot of money that was going to the euro who
pulling
wanted
out
the
of
dollar.
Europe into the dollar. Interesting.
Yeah, but I think in the long run, it's going to weigh on every economy in the world.
Yeah.
The biggest thing out there really is the dollar. Now, is Greece going to affect the dollar? Yeah, to some degree it is.
I think the sense is that the Eurozone is in fact going to come to the aid, however they structure
But
it.
if it doesn't, what happens to this market?
Well, if it doesn't, I think then we're in for a rough ride. I think it's going to bring the whole the Eurozone existence into question. But I don't think that's going to happen.
The run-up that we saw in 2009 is not going to happen again this year. Are you worried about that?
Oh, no, I'm not worried about it. I think there's a big difference between where we were a year ago and where we are today.
There's definitely a chance that, for the long-term investor to get on board and that this market will end up higher at the end of the year.
We have a 66% V-shaped recovery in equities. I don't think you're going to see it this year. There's too much overhang. There's too much uncertainty out there.
Life will go on. I think the glass is actually half full, not half empty.
Okay.
Perhaps it's going to be slow and there are going to be speed bumps along the way, but I think the overall direction, if not up, certainly will be sideways, and there's nothing wrong with sideways.